As we end one month and enter into a new month, we'll see how it's looking for the major currencies and the Commonwealth currencies, as well as how is the US-China tensions affecting the Asian markets especially. All this with Bob Mason of FX Empire. This is your week ahead. Hello, Bob. Good to see you again. Let's jump straight in. The last week of the month is relatively calm, but what can we expect from the major currencies next week?
In a normal world, week ahead, you got non-farm payrolls and ISM private sector PMI numbers, and obviously the weekly jobless claims. Normal world, I say, for the dollar. It's not. Trump's obviously gunning for his second term, so you got US-China tensions to consider and what actions the US takes, and on its continued assault against China. So that would be the main area of focus, I would say. And obviously, economic indicators will be in focus, but don't expect non-farm payrolls to have a material impact, with the initial jobless claims providing direction. For the euro, it's the ECB. That's the main event of the week, but we do have private sector PMIs to look at and German unemployment numbers. But the EU's recovery plan should offset any negativity in the economic data for now. Big question is, will the ECB make a move now that the EU and Brussels have delivered? For the pound, it's Brexit. We're into June, 30 days left before Boris Johnson walks away from the table if there's no blueprint in place. So that's a big one for the pound. Economic data, no biggie. Private sector PMI's finalized numbers shouldn't have too much influence.
So it appears that next week will be a little bit busier for the major currencies. But how about the Commonwealth currencies, specifically the loonie, given the announcement due from the Bank of Canada? What can we expect there?
For the loonie, it's a big week ahead. You got the Bank of Canada in action on Wednesday, and at the end of the week, you got employment figures. Those will be the areas of focus. Will the Bank of Canada make a move? Probably not yet. They'll want to see how things pan out. As oil prices continue to recover, and obviously economies reopen and demand picks up. For the Aussie dollar, it's the RBA on Tuesday. That's the main event of the week. And for the Kiwi dollar, things are pretty quiet. Not much to consider, which leaves it in the hands of market risk sentiment. And obviously, there's geopolitical risk with the US and China, and there's economic data out of China also to consider. That I hazard a guess that the markets will probably brush that aside. You got the Chinese yuan down at approaching 7.2 against the greenback. So there's a lot of tension that's likely going to continue to build as China lets the yuan lose its strength to rub Trump up the wrong way.
So it looks like we've got to keep an eye out for those all-important PMI numbers coming out next week, I guess. But in the meantime, let's switch attention to Asia. How's it looking for the Chinese and Japanese markets? What can we expect there?
You've got, economic data. We're looking at May private sector PMI numbers, the market's favourites, the Kaisen surveys. What impact are they going to have on, the yuan? None. It's really going to be, how relations between the US and China are next week. Trump's promised to, obviously respond to the Hong Kong securities law at the end of last week. So let's see what happens there through the weekend and how China responds. They promised a reaction which could come in the week ahead. So that's the big move. We're expecting, obviously, the yuan's been depreciating against the dollar, and that will likely continue if tensions continue to rise. For the Japanese yen, well, there's not much going on really for the yen. It's been stuck in limbo really. As tensions rise though between the US and China, could there be some support for the yen? The dollars continue to be the market's choice in terms of safe haven, but that could shift should things really deteriorate. Trump's going for a second term, but the way he's going about it, may not bode well considering the economic doom and gloom we're expecting from obviously the impact of the COVID-19 pandemic.
And lastly, let's discuss geopolitical risks, specifically with the huge tension at the moment between the US and China. How is that impacting on the markets?
Well, we've got obviously, tensions between the US and China. That's a key area of focus, and that's unlikely to change next week. COVID-19, the numbers continue to reflect a downward trend. The EU, lockdown measures continue to ease, and we're seeing the downward trend despite the easing of lockdown measures. So that's a positive. And if that continues, through the next week, then that will suggest that, a second wave can be avoided, and that will be a huge positive for the markets. Then we're going to want to see some progress on, COVID-19 vaccines. We had some positive news last week and the week before, so we want some more of that, and that should provide some support. You throw that in together with, obviously fiscal and monetary policy support, and at least a bottoming out in terms of the economic depth of the abyss that, we saw in April, then those are all sort of market positive. Whether we can see commodity currencies hold on to their current levels, however, remains to be seen. There is a reality that, this economic recovery is not going to be as rapid as many are expecting. So, we can expect some choppiness in the week ahead on that front. But geopolitically, you've got US and China, and then on COVID-19 front, that's the positive for the markets. So it's the pendulum swing. Which one's going to garner the biggest amount of attention in the week? It really depends on the noise from Beijing and Washington.
Well, that's all for today, Bob. Thank you so much for joining us, and I'll see you again next time. That was The Week Ahead with Bob Mason of FX Empire. In the meantime, to keep up to date with all the latest information and developments in the market, please don't forget to follow us on all our social media outlets.